Let's talk Wells Fargo. Why? Because it was upgraded today to a buy, named the top pick at UBS. It comes ahead of earnings on Friday. It's our call of the day. Stephanie Link knows I'm coming to her on this. The price target increased to $41 from $23. Steph, look, you bought this when it was incredibly unpopular. OK, now people are coming around to the point of view, because there are more notes about it that we seemingly cite, every couple times a week, that Wells Fargo is the place to be. It's your biggest bank holding. Make the case now to a viewer who may not own it why they can still.
Yeah, and I definitely think that they can still. Only 46% of the sell side have buys on this stock. The stock was down 34% in the last year alone. It trades at 0.8 times book value. The group trades at 1.2 times book value. It trades at 9.1 times earnings. The group's at 11 times earnings. So you can make a valuation case if you believe the turnaround is going to work. And turnarounds, we talk about it all the time, they take a long time. But this company has a very strong CEO. He's repairing the company. They have a whole new executive team, new people on the board, new business lines, and they've already cut numbers and increased reserves. So a lot of the bad news is out of the way. And, oh, by the way, they have a huge focus on cost cutting. And I think they could probably reduce costs maybe like 2-3% a year. And that goes a long way on the efficiency ratio side in terms of the operating leverage, what it means to earnings.
So this goes beyond what sounded primarily like a bet on Charlie Scharf. Now it has morphed into some fundamental reasons, it sounds like you're saying, as to why you can own this, beyond simply loving the person who's guiding the ship.
Yeah, he's made the right decisions, too, though, right? I mean, he's hired an entire new executive team who has a ton of credibility. So it was just a matter of time for them to kind of put their program in place and then execute on that program. And that's why I say it takes a long time for turnarounds to work. So I think you're going to start to see an improvement gradually. And, of course, the yield curve and rates going higher certainly doesn't hurt. It absolutely helps them in every way. And, again, the sentiment, while it's improving, you still have 15 sell-side analysts that are either hold or sell on this stock. So I think sentiment can further turn. Now, I will say this. I do not like this setup into the quarter, right, because the stock has run a lot and expectations are higher. But I do like this for the long term.
Well, that's an interesting point you make. And John, look, you own Wells calls, along with J.P. Morgan stock and Bank of America calls. And what Steph said as she finished her thought there sounds to me like where Kramer was on this 10 days ago, with like, look, these stocks, yes, you believe in the banks, but don't be surprised if you get a pullback once they announce earnings, right? Because it happens every time. There's belief in it, then you hear the earnings, and then there's a sell-off. So you're going to get a different and maybe better entry point into the banks, and maybe Wells Fargo included. What do you think?
Well, and it's one of the ways I am playing it, Scott. Outside of the ones you mentioned, I'm also in Capital One and KeyBank. The one not on that list is Citi, and I have to kick myself for not getting in because I cited it when Ms. Fraser was elevated to the position that she's taking. I just kick myself, but I think I might get a chance to get into that one a little cheaper. If not, Scott, right into these earnings, I'll be selling puts and at least get a little bit of satisfaction from that in that stock, letter C, because I think I can get a better entry point. And if I make that commitment by selling puts, it obligates me to buy at that level. So hopefully I do get that put to me, Scott, because like I say, I think she's an ESG play just by being the first woman to lead a major bank.
Interesting. Amy, you bought more J.P. Morgan, and we'll take a break after that. But tell me about it.
Yep. No, I agree with closing the underweight for interest rate sensitive banks. I also think there's going to be a big M&A cycle in front of us. So we have a big position in Goldman Sachs. We bought more. We own J.P. Morgan. We bought more. Just really closing the underweight in these names that could potentially benefit from yield going up, which we think is going to happen as well.